Good morning to all traders and welcome to another Market Insights video provided to you by Orbex. My name is Stavros. I am the head of investment and also your analyst and host for another daily video. Mr. Trump and Mr. Kim didn't manage to actually find a solution on North Korea's denuclearization program, so the US is most likely going to continue imposing sanctions to North Korea. Mr. Trump actually literally stood up and left the meeting, and that was made a little bit of a headline, and a lot of news media covered the topic. But note that from the market perspective, we didn't see any sort of moves. Dollars rally, let's say, was supported yesterday mainly by the US GDP figures as they came out much better than expected quarter on quarter. That proved that the last quarter of last year, actually the US did very good and the economy grew by 2.6%. Less than the previous quarter three in 2018, but it did much better than all expected, and also what markets expected, because there has been a slowdown in global economies, but the US remains strong, not only on GDP figures, but also on jobs and unemployment. Now today, we also have, of course, some reports coming out, and I want to focus on the Canadian GDP. But before we go to our charts, just know that the Caixin manufacturing PMI came out much better than expected. This is the second report again from China that is coming out better than expectations, which adds a bit more of an optimistic view to the Chinese economy and what is the effect of the trade tariffs to the Chinese economy. Now, other than that, we're expecting some retail sales from Germany, which are going to move the markets, but not something that would cause much of a movement. We're expecting a number of PMI reports in general from the US, as well as some minor releases from the UK. Now, going to the Canadian GDP, the previous release on a month-to-month basis was recessionary. Now, in case we get a number that is above zero, that is going to be considered as good for the economy. In case we get, of course, something better than 0.1%, that is going to be considered good also for the markets. If we get another recessionary value figure, then the Canadian dollar is going to suffer some losses and actually lose all the gains that has seen over the past few sessions. We're expecting some US data, the PCE price index, but I want to also focus here on the ISM manufacturing PMI, a very important report if you ask me, because manufacturing activity is very critical on jobs, on employment, and hence economic growth for the US. Now, going straight to our daily chart on the Canadian dollar. Let me just grab my pen here. We can see a three-wave cycle, a three-wave impulse wave higher. And from here, from this 136.7 high, I'm expecting prices maybe to go a little bit lower, down between the 0.5, 0.6 Fibonacci retracement of the full cycle. But note that I'm a bit hesitant for the time as long as this support holds prices, because there is a bullish divergence over here that can be noted on the histogram and prices, that adds a little bit of a bullish bias on the dollar CAD. Now we can go a little bit lower down on the 4-hour chart to check what's happening there. Over here, we see prices are moving within a triangle pattern, okay, and also within an ascending channel. Descending channel, and is actually creating lower lows in some sort of repetitive manner. Now, from here, we could see prices moving a little bit lower, okay, where we're expecting a bounce over that level, which is the ascending trend line of the triangle, or we can expect even a break down to the previous low of the corrective wave A, okay, near 130, which is also psychological level. Now, from that level, we can either go higher up to have a retest and then move lower for a breakout, or breakout straight away, okay, if momentum is very strong, or we can see prices even moving in a range until further close are given. Now, I want to, of course, go down on the 1 hour chart as well and have a little bit of a better view of what's happening here as well. We can see another triangle pattern, okay, within the triangle. It's a minute move over here. And from there, now I'm expecting a bounce over here, a bounce over here, and prices to move lower. And as we said previously, either a retest and move it down, or move down without, as long as momentum is strong. Now, of course, you know, for this to happen, we can also draw our trend line over here, connecting these lows, and we could be expecting prices first to break below that level, which is around 131.50. Also a strong psychological level. Now, in case prices move above that level, okay, we could be expecting a move up to the last count sooner than anticipated, and that D wave would actually become this level with a bit of a inefficiency, inaccuracy, let's say, but it will still count as a wave. Now, before we close for the day, I want to go a little bit lower on the 30-minute charts and have a look at what scenarios could play in ahead of the report and also after the report. Now, I have drawn a trend line down here correcting the lows, and a trend line at the top connecting the tops. Now, in case prices move below this trend line, we have three levels to look at. Okay, one is 134.45, one is 131.27, and the other one is 131.200. Okay, expectations, of course, ahead of any release normally are that bonds are contracting and the liquidity in the market is low. So indeed, we see bonds contracting over here and over here, and this there is literally an attempt right now from burst to break below, but we're not sure if this is going to complete. Okay, we could have prices ranging all the way back here to the top of the Bollinger Band and stay in some sort of range. You know, we could see a range like this, or we could see even a tighter range above the trend line and below the middle Bollinger Band. Now, for the release, of course, we need to draw some very strong and good support and resistance levels. Okay, one is right here at 131.73, which is the top of the Bollinger Band. One is down here, 131.42, and because this report is major, of course, we have to draw other lines that are going lower down the line. That is the 131.15, and also the other one is the 132. Okay, now the 132 is a very strong psychological level as well. So in case the Canadian GDP comes negative, we could see the dollar moving all the way up here against the Canadian, but right at this level, I could be expecting prices to be repelled. Okay. Now, after the release, normally we are seeing either a dead cat bounce, which is pretty much something like that. Okay, and then prices move lower after a retracement to the 50 Fibonacci or so. If, of course, the Canadian dollar lost momentum because of a bad GDP, then prices could move all the way up, and we can have something like that. So we could see prices, breaking maybe above the trend line, having a retest at this level and moving along up. But that would really depend on the 132. Pay attention to those levels, and feel free to comment, like our video, or ask any questions on the commentary section on YouTube, on the commentary section on our videos. Thank you for watching another Market Insights, and I wish you have a great weekend. Please feel free to subscribe to our channel in order to stay updated with the markets, and don't forget to visit our blog, where you can have a look of what we cover on a daily basis, the latest news. We publish trading ideas, and we provide all the necessary tools to serve you responsibly.